Most traders don't actually have a process that they follow when taking trades. That explains why over 95% of traders are losing money consistently in the market. In this video, I'm going to break down my 6-step process that I follow every time I'm trying to actually take a trade. Alright, so let's get started right now. Alright, so the first step that I always follow is going to the higher time frame and understanding the overall bias of the particular market. Is the market going up or down? That is extremely important before you take any particular trade. Alright, so once you have the directional bias, which I usually go on the 4-hour time frame to be able to understand where the market is going, then once that is figured out, then I go to lower time frame like the 30 minutes time frame to 15 minutes time frame to be able to identify my order block and my point of interest. I go to those particular time frame because on the higher time frame, once you have the order block right there, it will be too big and the stop loss is end up going to be very big of a stop loss, right? So you have to go to the lower time frame and get your order block and your POI so that you're able to actually have the smaller stop loss, ultimately be able to use a bigger lot size and make more money, which is the goal, right? So on the lower time frame, get your order block. You know what it is. An order block is the last bullish candle before the bearish move. That's a bullish order block. For a bearish order block, you're looking for the last bullish candle before the bearish move. So you have to actually have that figured out. Once you have those things in place, then you have to now look for liquidity. Very important. So for my liquidity, I always wait for the Asian session liquidity and equal highs or equal lows. Those are very important when taking trades. I don't just randomly take trades. I always wait for those parameters to be actually identified, and then I actually wait for the entry signal to be able to execute. So we have the directional bias, we have our POI and order block. Then we wait for the price now to come to our entry signal, right? So you don't just execute trades without waiting for proper confirmation. So for confirmation, I always go to my 15 minutes time frame and my 5 minutes time frame and wait for my confirmation to actually execute my trades. Before execution, you have to actually understand how much money am I risking in this particular trade, which comes to risk management, right? So you have to understand, okay, how much is my stop loss? How much is my take profit? How much risk am I risking on this particular trade? Is it 1%? Is it 5%? Is it 0.5%? So you have to actually understand that even before you take a particular trade, right? So I get my position size calculator, I input my numbers, then I actually get the actual load that I'm supposed to use on that particular trade, and then I wait for my entry signal, then I execute. The mistake that most traders make is you don't predefine the risk of that particular trade. You are just randomly taking trades without understanding how much money you're going to lose on that particular trade, and that's very dangerous. Why? Because when you don't know how much you're going to lose on a particular trade, what's going to happen is that every move against you will feel like hell, because you're not really understood and fully accepted and internalized the risk of that particular trade. Every pip in your direction, you'll be excited, right? Because you are somehow thinking about the money, which is the wrong way of trading. So always accept the risk, understand how much money you're risking on that particular trade, and then execute. Execute only when you've understood those particular parameters. All right. So the other step that is very important is execution. If you've been following us for a long time, there are things that I don't do, which is pending orders. A pending order, for me, I feel like it's a very dangerous kind of trading, right? Because you are just literally just placing your pending order right there. The market can either go through it or not, or respect it. But when you're waiting for a confirmed entry, it's different, because you are waiting for the market to give you a sign that it's ready to actually reverse. And that's why I always encourage my students to always wait for a confirmation. For when it comes to pending orders, I don't really like them, and personally I don't actually use them. So it's very important to get your confirmation right, and once you have that, then you even know that, okay, right now this is my risk and I accept whatever is going to happen, and you've already confirmed that particular trade. And if it loses, then it's just part of the game, and if it goes in your direction, well and good, at least you waited for the right confirmation. All right. And then the last part, which is most important at the end of the day, is trade management, because this is going to either kill you or make you, right? So When it comes to trade management, there are two ways of managing trade, right? You can actively manage the trade or you can passively manage the trade, right? Set and forget. For me, I like to actively manage my trades. When it comes to that, again, there are two things. Are you going to be taking partials or you are going to be trading your stop loss? When it comes to me, I focus much more on trading of a stop loss because it allows me to be able to stay in the trade and actually gain the maximum I can get on that particular trade. That's the reason why of all my students are always encouraged to actually trail the stop loss as the market is going in a direction. So for example, if the market is going into the upside, it means that when the market makes a new higher high, comes down, makes a new higher low, I'll move my stop loss to a new higher low, right? After the market breaks that high, I just keep on doing that. And if the market now decides to come down and take me out right there, I would know that my setup has been invalidated, because that means that the trend has now shifted, which is extremely important. A stop loss has got two rules, right? Two rules, two principles. One, it helps you to actually invalidate the trading setup, and number two, it actually helps you it helps you from losing a lot of money, because you predefined how much money you are risking, and by moving the stop loss slightly below that higher low, it means that if the market breaks below that level, it means that your setup has been invalidated and the trend is potentially ending. Therefore, you get out. Now, when it comes to taking partials, I'm really against it, because you get out, for example, at 1 to 3. Let's say your target is 1 to 10, right? Then once the market comes to 1 to 3, you take 50% off. It feels good, right? It feels taking 30% off the trade feels safe and feels like I've actually secured the win. But in the long run, you end up missing out on big trades because you are always capping your trades when you see the market going in a direction. What the 5% of traders actually do is that whenever the market is going in a direction, they actually add on their position instead of actually removing or getting 50% off that particular trade. So for me, hence I always go with trading of a stop loss, unlike taking partials and all that. But at the end of the day, you decide what you do, but that's exactly how I actually take my trades and manage them. So it's extremely important that you have one approach that you follow, and this is going to keep you consistently profitable in the market. All right, so those are the 6 principles, 6 steps that I always follow before taking any particular trade. So in that particular order, I always go to the higher time frame for the directional bias, preferably the 4-hour time frame. I go to the 30-minute time frame to be able to identify my order block and the liquidity levels. I wait for entry confirmation signal to be able to enter trades. I predefine my risks, and then I manage my risk. I manage my trades in that particular order, so that at the end of the day, I'll end up profitable. All right, so if you found value in this video, make sure to subscribe, like the video, and comment in the comment section. Until next time, goodbye.